Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin slash cryptocurrency update for January the 22nd. Before I jump into the content for this video, please do me a huge favor. Go ahead and hit the thumbs up button. Also, don't forget to subscribe to the channel, and don't forget to click that bell icon to get notifications when I release new updates. So the first thing I want to talk about today is the fact that the market really hasn't changed that much. So I'm going to be regurgitating some content and basically going over some stuff that I've really already covered. So if you watch the videos every day, make sure you slap this thing on 2x and you can just kind of stop it at the parts that are more interesting to you. But for those people that are especially new to the channel, some of this will be new, but there just isn't that much happening. I debated on whether even to do a video today, but I've been pretty consistent about doing them every single day. So I thought, well, let me just go ahead and shoot one and, we'll talk about things. So the first chart we're going to take a look at is the weekly chart. Obviously, nothing has really changed. What I'm waiting for is I'm waiting to see whether or not this price is going to move back underneath this. I like the 19-week moving average better. Some people use the 21. Doesn't matter what you use. That's what I'm personally watching. I want to see if price is going to fall back under that level. A lot of the bulls are actually calling for a drop to around $8,200 and then a continuation of our daily uptrend. What's interesting about that is this 19-week moving average is actually sitting at $8,182. So if it turns into support, it would probably turn me into a bull because when you go back in Bitcoin's history, that 19-week moving average has been extremely accurate. Look at this. If you go all the way back to 2015, once it broke above it, it just rode that sucker. It rode it and rode it and rode it all the way to the top in 2017. And when it finally collapsed underneath it, it pretty much stayed underneath that moving average up until the summer of 2018, where it had this false break and then right back underneath it and just rode that sucker. Right? And again, in my past videos, I talked about this fractal over and over and over again about how I think this move is a repeat of the summer of 2018. So we're going to find out, pretty soon here. So I'm watching that level with a lot of interest. I'm obviously still watching my weekly RSI to make sure that it does not close outside of the red box. I don't care if it tiptoes out of this box as long as it doesn't close outside of the box. For example, last week it was outside the box, but then it pulled back with this wick and closed down inside of it. Also, as we've talked about in past videos, it's been unusual, and by unusual I mean it hasn't happened in the last 6 or 7 months for Bitcoin has not put in more than 2 green weekly candles consecutively. So I do expect this is going to be a red candle. Okay, but time will tell. It's only Wednesday. Obviously, we can't count our chickens before they hatch. There's 4 days left in the week. Okay, so that is the weekly chart. I'm going to go ahead and delete that, or at least close it out for now. If we take a look at a 3-day chart, nothing has really changed. Same deal, of the many things I compared. This move to one of the things I compared to 2018 was the size of the move. So in 2018, we had a 41.93% drop, followed by a 46.93% pump. It's weird how those were both 0.93%. This year, so far, we've had a 39% drop exactly, followed by exactly 43%. Also kind of strange. But very, very similar moves, right? This big dump, followed by this big pump. Of course, the timelines, I'm not going to go through the entire fractal over again, but timelines are also very similar. You had 81 days from move to move here. And in this move, our top to our top was roughly 86 days, it looks like. Yeah, 86 days. Okay, so very similar length as well. So still watching that. Also watching with great interest the same level I talked about, I believe, yesterday and the day before. It is this downward sloping trend line on our 3-day RSI. As a bear, I was going to say bear and bull at the same time. As a bear, you want to see this break and close underneath this level. As a bull, you want to see this hold this level and become a bullish retest where you get the break, bullish retest, and moonshot. Okay. As a bear, we want to see it come back underneath it and this be one big fake out, otherwise known as a bull trap. Okay. So that's the 3-day chart. some really easy levels to keep an eye on the bigger time frame. We have basically the red lines. These are levels of resistance. These green lines are levels of support. So obviously our resistance was the resistance that I talked about way back in November. I said, hey, look, we're probably going to pump up and test this resistance. It's exactly what happened. It's sitting right around $9,071. Unfortunately, you know, I've talked about this in the past as well. If you're not, you know, a trader, or if you're new to trading, it's really easy to say, well, wait a minute. If in November you were saying it was going to go to $9,000, why didn't you go long and ride it all the way up? Because thinking the market is going to do something is not the same thing as having a trade setup. I trade setups. The reason I trade setups is because setups provide you with specific points of invalidation where you can say, okay, this idea is wrong. It's invalidated. I know I need to get out of this trade. Just thinking or feeling like the market's going to go back up, you know, you have no idea where to set your stop loss. You know, here it was November 22nd when I said I thought I was going up to 9,100, 9,200. So if I had entered there, you know, even if I entered on the close, I would have entered somewhere around 7,300 or 7,400 bucks. You know, would I have rode it all the way back up, or would I have closed it when it dropped $1,000? What do you think? And I think it's pretty safe to say I would have closed that for a loss, and I would not have got that move. Okay, that's the reason you have to trade setups. What it does do, thinking or being able to predict in the future, say, you know, I think it's going to go to 9,100. What it does do in a case like that is it keeps me from shorting, or kept me from shorting these levels down here. So whereas it pumped back up to 7,500, 8 grand, and some people were, you know, commenting on my channel even saying, hey, I'm going all in, I'm short here. Well, I wasn't, right? Because I fully expected that there was this plausible scenario where it could go to 9 grand. Again, not the same thing as knowing it's going to go there, not the same thing as being so confident that I'm going to take a long position and write it there, but enough confidence that I didn't want to short $8,000 Bitcoin, and I didn't. Okay, so it did hit that level. It was not able to get up to the $9,500 level. So will it still get there? We really don't know. At this point, I would be surprised to see it make another move up, but I'll show you a possibility on a daily chart in just a second. Instead, what I'm really watching on this 3-day chart price-wise is I'm watching these two green levels of support. One of those levels is this roughly $8,500, which you can see was the top of this candle, right? In fact, we can just show you real quickly on this chart. We can take a look at this. We had a move up. We set a swing high, a move down. This actually retraced to the 61.8. We had another move up, a move down, retested this old high, another move up, a move down right here, retested this old high, and in an uptrend, we've talked about this in lots of videos, you're taking the stairs up, right? And each level, that's not a very good staircase, each level tends to come down and retest the old highs, right? That's how it works. Bam, bam. And then it keeps going up. That's an uptrend. It's just a very textbook uptrend. So it is possible that this thing is going to just go ahead and move one more leg up, or more, right? And try to get up to this level. I don't think so, right? The reason I don't think so is because of some stuff I'm seeing on the daily, which I'm going to talk about now. So let's jump over to a daily chart and go ahead and close my 3-day chart. All right, so this is a daily chart. It's not really marked up or anything, so we'll have to mark it up. But that's fine. So the first thing that I'm seeing on this daily chart is I'm seeing this red descending trend line. Okay, we'll make it a skinny line so it's a little easier to see here. And to me, it just looks like this was a bearish retest where we came up and retested that trend. It failed. It's come back down, come up, tested again. Looks like it's trying to put in tweezer tops, right? This candle's going to close in an hour, so we'll have to wait and see. But if so, that's a bearish signal, and it could be signaling a downward move, okay? The other thing that looks bearish on this daily chart is the fact that we came up and tested this 200-week moving average. Now, for those of you that watch the channels on a regular basis, you already know how I feel about that. But if you're new to the channel or if you missed it in the past, essentially there is a trade setup called a far from moving average trade. And when you get too far away from an important moving average, it's not at all unusual to come up and retest that before continuing your trend. So we were in this big downtrend. We got really far away from the moving average. It's up here around 94, 9,500 bucks. Our price is way down here around 6,400 bucks, which is an almost 50% difference, right? So not unusual to come up and test that thing and then keep moving down because we're in a down trend on the larger time frames. Okay, so that's bearish in nature. The other thing that's very bearish in nature is this fact that we put in a double top. Now, a double top in RSI wouldn't normally mean that much to me. It's where this double top is at. This double top is occurring at the top of an uptrend. So this is a small uptrend that started back in December. So macro level, weekly, we're downtrending. But on a daily chart, we're actually uptrending, and we have been for a month now. Now suddenly we're putting in a double top on RSI that's also sitting right around this overbought territory. That's very, very bearish, especially when you start putting it together with the retest of the 200 moving average, with the retest of the top of the downward sloping channel, and also with this declining volume. Okay, we don't want to see declining volume. If you're a bull, you want to see volume growing, like it was growing back here. Okay, now none of this guarantees anything. These are just the things that I'm seeing, right? This looks bearish to me. And this actually looks like a very weak retest of the neckline. Usually when you get a double top on price, what you get is it comes back up and tests it. But in this case, RSI wasn't able to make it up to that level. So I do think this thing is getting ready to move down. I think the big question is, how far down is it going to move? Is it going to move down, to this $8,200 level that a lot of bulls are talking about, this level down around right here, which also lines up almost perfectly with that 19-week moving average? Is it going to do that and bounce off? Possibly. Is it going to move down, maybe do a 61.8 retracement? Parabolic moves often like that zone. That put it down around 73 to 7,400 bucks. Possibly. That was an old area of support, so I could see that. But if it loses this 8,100, I tend to think that it's probably going to go ahead and punch it a new low, and that this was all going to be one big false bottom. Okay, time will tell, obviously. I'm in a short position right now. I've been in that short position for a couple of days. Might have been yesterday that I opened. I don't remember exactly, but it was 8,865, or I think it was maybe $8,863 I opened it at. Sorry, not 88.63, 86.83, $8,683. So I'm up about 0.5%, and I'm just riding that because I do think it's going to move down, and I'd really like to ride that down to the $5,500 area if I can get that to work out. So that's kind of what I'm seeing on that daily picture, the weekly picture, and the 3-day picture. I still firmly believe that we're in a downtrend, and I still firmly believe that this is a repeat of the summer of 2018 and that we're going to go lower. Now, where my opinion differs from not just the bulls, but from most bears are calling for this drop to 5,500, and they're calling the $5,500 the bottom. Okay, so I'm going to talk about that in just a second. Look at this interesting line. I would keep an eye on this, right? Look how beautiful this thing is. Had a touch here, basically acted as resistance through here, had support here, a little mini bounce, and boom, it's underneath it. If this closes underneath it, we may see some serious downside to ensue. So let's talk about trends. Let's talk about targets. So like I said, my opinion is different even from other bears, because a lot of bears are saying that, hey, you know what, this next move down is going to take us down to 5,500 bucks. That's what they're saying. Okay. Or a lot of them, not all of them, obviously. So let's say that our channel looks something like this. If you look, 5,500 to 6,000 bucks will be right inside that channel. That's all fine and dandy. The problem is look how many times this thing's been touched. Touch. The more times it gets touched, the weaker it gets. Eventually, it's going to, more times than not, break through. What's going to happen if it breaks through there? Well, if we're looking at our market cycle that I've talked about in many videos, this is where I think we're at. I think this pump was actually denial. I think this whole thing has been an echo bubble. And I think that we had our hope, our optimism, so on and so forth, our euphoria back in the summer. I think that the, what they call the China pump or the Z pump was actually anxiety. I think we have denial going on right now. And what comes next is a big move, the capitulation / panic move. The capitulation and panic move in 2018 saw price drop by 50%. Okay, not 50% from the high, 50% from the support. Okay, so if we get down there to around $6,000 and suddenly drop 50%, where's that going to put us? Well, it's going to put us a hell of a lot lower than $5,500. Okay. Now, I'm not saying that I'm not going to look for longs. I will look for longs at that level. I will be looking for some type of reversal signal. But just like I wasn't going to just, go a little bit willy-nilly and say, oh, okay, I think the bottom's in, I'm going long here, just because I'm not going to just go long at 5,500 either. I'm still going to want to see some bullish structure. I'm still going to want to see a reason to take a long position. Hitting 5,500 is not a magical number that's so magical I'm just going to throw technical analysis out the window and suddenly start longing Bitcoin. Okay, there are some levels down there that matter, and I want to see how price acts when it gets there. So, for example, and again, I've talked about this in past videos, so this is probably a review for a lot of people watching the channel. We're on a log chart right now, so if we draw some trends, go ahead and slap this thing up there. Talked about this many times. The bottom down here in 2018 was actually the 2.618 trend level, right? Just in case somebody hasn't seen the video before on that, let me draw it up real quick and it'll only take a second, right? So you got your down, you got your up, and boom, right there, 2.618, 3130. Down up, 2.618 is $5,100. So could that be the bottom? For sure. And especially if you start putting a weekly moving average on there, the 200 weekly moving average, as we've talked about time and time and time again, it has actually acted as support in the 2015 bear market. It acted as support in the 2018 bear market, and it's currently sitting down around $5,200. So makes some sense, right? We'll have to see. One beautiful thing, if you notice back here, first time I touched it, it came back up, came back down for a retest, and gave it a very easy signal to get into a trade right there. So maybe we'll get lucky, and it'll come down, hit that thing, come up a little bit, retest it, put in a beautiful double bottom or in a sitting triangle like back here, and then start to move up. That would give me my bullish structure that I need to be bullish, right? If only I get that lucky. We'll see, okay? But the only problem I see with this is, again, if we capitulate and we get a big hard move like this, a 50% move, it may take us lower than $5,000. And one reason that I think it might happen is because we do have this really large liquidity gap back here, this huge green candle, right? And this is a massive candle, okay? What we need to really do to give you an idea of how big this candle is, you see a lot of candles like this in a weekly, but what we really want to do, let's zoom in. First, let's zoom in and see if we can get it on a 4-hour. I don't know if we will be able to or not. Yes, we did. Okay, so here's the 4-hour. Can we get an hourly? Does the data go back far enough? It does. Look at that. Okay. This was the breakout on April 2nd. Or excuse me, April 1st. That is a 1-hour candle. In 1 hour, that price moved up 11.44% from open to close, and almost 15%, but we don't care about that. We care about the close. 11.44%. We have a freaking massive liquidity gap. It is sitting at $4,180. Okay, so personally, I still don't think we should be ruling out that target, that $4,000 level. Okay, it's entirely possible that it just hits it on a wick, right? Throws a wick down, tags that level, and then bounces, and that'd be cool. That'd be fine with me. But I would really like to see price come back down and test that level so I could feel secure and going long. And by the way, if this is an echo bubble, which is what I think it is, it does not mean that we're going to put in a new low, okay? I've done some videos in the past where I laid out some plausible scenarios about $1,300 Bitcoin or $1,000 Bitcoin. I still think they're plausible. I just don't think they're the most likely scenario. This thing has found a lot of strength, and it's really acting very cliche. Echo bubbles tend to be smaller bubbles. They don't tend to be bigger bubbles, right? So I think it's entirely possible that really what happened is price just got, way ahead of itself, and that it might just want to come back down to this line and then finally start our nice steady ascension from there. That's what I would love to see. Okay, And if you go back and look at some charts like the NASDAQ chart, you'll see something very, very similar happen after the dot-com bubble. So if we look, we're going to change this to a monthly chart. Stocks move a little bit slower. So look here. See this? Yeah, the huge dot-com bubble, it popped March of 2000. And basically it bottomed out right here in the winter of 2002. And it had this huge run up where it went from 795 all the way up to over 2000, basically tripled. Okay, see this from here to here. So you had it 181% gain, but again, it's almost triple the value, right? From down around under 800 to almost 2400. Then you had this freaking massive dump, right? Just massive, lost 54%. People started to panic all over again. Oh my God, it's happening again. It's happening again. It's because it was an echo bubble, right? But in reality, all it did was come down and test its breakout back here. See that? Came up, came right down and tested it. And this is where you wanted to be buying. If we put this on a line chart, it's a little bit wonky. I wouldn't really call that a double bottom. It's wishful thinking. But the fact that it came down and tested this old level back here, I think you could have probably found some reasons to go long. This is a monthly chart. You had freaking oversold conditions on a monthly chart, right? I'd be willing to bet there's probably some divergences on the smaller time frames. Oh, hell yes there was. Look at this. This is a weekly chart of the NASDAQ. You had price putting in, holy cow, man. Lower low, lower low. And let's check. Low here was 1,085. Low here was 1,000. Yeah. Boom, boom, boom. That is four. That's three lower lows and three higher lows. You had quadruple bullish divergence on a weekly chart. So had my dumbass been trading back then instead of playing video games or whatever it was I was doing, okay, I could have definitely longed that. This was after 2009. Geez, did it take that long? It really did take that long. Okay, so this was after the housing bubble and everything. Came back down there, and this is basically a setup that I trade with crypto. Could have been going long down here around 1,000, to 1,100 on the NASDAQ. And if you look now, the NASDAQ is sitting at 9,188. It's almost 9x return, right? I guess it would have been like 8x. Yeah, almost 800% over the course of about 10 to 11 years. But that's what that's kind of what I'm expecting to see with Bitcoin, is something more like this, where we come down, we have the echo bubble. We don't quite put in a new low. We basically retest our original low. By the way, if you're thinking, that's stocks, James, you can't compare stocks to Bitcoin. First off, yes, you can. Anybody that tells you that, they're stupid. But second off, even if you don't want to compare stocks, even if you just want to use Bitcoin and compare Bitcoin to Bitcoin, fine, you can do that. Look at this chart here. So this is a BLX chart, so it's got all the nice, beautiful history for Bitcoin. Okay, and what happened back here? This is 2015. So you came down, put in the low, right? This was in January. Had a nice little rally. It rallied from a low of 163, rallied to a high of 317. So almost doubled, and then poof, pulled back, basically retested its bottom. Didn't quite get to the bottom. This is a monthly chart, so keep that in mind. If we put it on a weekly chart, it's going to look a little different. Okay, so here's your low back here. Basically broke out, came down later, and retested this close. Okay, so why wouldn't we do that this time around? Maybe we don't. There's no guarantee that we're going to do that, but why wouldn't we, right? Why wouldn't we? I think we will. So that'd be down around $4,000, okay? Down around this level down here. And then the good news is in 2015, after that happened, Bitcoin went on a historic run, ran up from around $200 all the way up to $20,000 with a 100x return. Of course, we just saw what happened on the NASDAQ. It ran up from down around 1,000 points all the way up to where it's at now, which was almost 9x return. So, I'm still, I say I'm macro bearish because I'm talking about on this weekly level, but big picture, when we're talking about monthly, for example, or yearly, I think Bitcoin has a bright future ahead of it. Will it go to new all-time highs? I think that's very difficult to say. I just don't think we know what effect futures is going to have on this market. I would like to think so. I would like to think that it is going to repeat past cycles and it is going to go up. And if it does, if we're using math and we start extrapolating some numbers and the returns and, diminishing returns and all that kind of stuff, I think the next target would be up around $75,000. I think that would be the next market top. Okay. And I hope that comes true. I really do. It'll make me wealthy. It'll make a lot of people wealthy who might not have a chance to be wealthy otherwise. So that would be wonderful. But, we'll see. Who knows, really, who knows? Right now, I'm just talking about this thing coming down and putting in a nice bottom with a nice, beautiful W structure is what I really want to see. Okay, so that's weekly, that's daily, that's 3-day. On the smaller time frame, what is it, 518? I'm basically watching a couple lines. You guys know by now if you watch the channel, I just love RSI. I don't care that much about the overbought and oversold stuff. I care more about divergences and trend lines and things like that. And we basically have had this upward sloping trend line that started back in November. Look at this. Touched it again in mid-December, touched it again in early January, and it actually did touch it right here. And this was yesterday. Bounced right off of it, came up, and we're basically running in the resistance at this flat level around 52 RSI. So we're just kind of ranging in between there. If it breaks north of that, I would expect it to go up and retest the bottom of this upward sloping line here. Maybe up as high as 9,000, which would fill in this liquidity gap. Yes, that is a gap. Right? See right here? The way it just dumped like that. I don't really want that line to be red, yellow. It's confusing. Let me draw a different one. Okay. Right up there around 9,033 bucks. This was that huge dump, had like 2.5 thousand Bitcoin volume on a 5-minute candle. So I could definitely see it coming up and retesting that, trying to shake out some late bears and trap a few additional bulls. Okay. If it falls underneath that 4-hour trend line, then I think we'll probably go down. And I think we'll probably go down to this level here, right? Down around 75 to 7,600 bucks. Which would fill in the CME gap. And I think that's the point that we're going to have to watch carefully and say, okay, is this a pullback or, a dip that might be for buying, or is this a falling knife where we're going, to continue our downtrend? Okay. Last thing I'll talk about, I'm not going to talk about alts today. Last thing I'll talk about in this video is the CME gap. Is it filled? Is it not filled? It depends on the timeline. Okay, this gap that opened up this week. On the daily, there was no gap. The daily just opened up. Where's the daily? Right here, it opened up. No real gap there. Okay. On the 4-hour, there was a gap that looked like this, where it was in between this red line and this red line. You can see it came up and perfectly filled it in before it dumped. Just a tip, you might have wanted to short there. See the price, 88.65. I'm short from 88.63. On the hourly chart, there's still a gap because this is the actual close right here, way up here. Okay, I care more about the bottom of the candle right here. So that gap's all the way up at 89.35. If you want to, look at the hourly, it just depends on which timeline you care about. I don't normally care that much about the smaller time frames. It's nice, especially if it fits my bias. That's bonus points. But, we'll see. That 4-hour gap, I think that was significant. And this one, I don't know. I don't know if it's significant or not. Is an hourly significant? Tough to say. Okay. So I think that's pretty well where I'm going to wrap up on Bitcoin. Okay. As always, I'm waiting for the market to tell me what's going to happen. I don't have a crystal ball. I don't, know what's going to happen. I'm just looking at what I feel is the most probable. It so happens that I disagree with just about everybody, the bulls and the bears alike, but that's fine. If I'm wrong, I'm wrong. That's, part of trading. So we will see, and obviously we'll know soon enough. Okay? All that being said, guys, please remember I am literally some guy sitting in a spare bedroom, so nothing in this video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up. Don't forget to subscribe to the channel, and don't forget to check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and of course where you can join my paid trading course if you'd like to learn how to trade. This is James with Crypto Common Sense. Trade safe.